But first, the top story this half an hour, focus on earnings. Big banks expected to report their first quarter tomorrow, including Wells Fargo and J.P. Morgan and PNC. This coming after big bank CEOs testified yesterday before the House Financial Services Committee. Joining us right now is Mahoney Asset Management CEO Ken Mahoney. And Ken, it is good to see you this morning.
Good to see you as well.
What are you expecting from the banks for the first quarter?
I think we'll be okay. I mean, look, we have lower expectations, and with that sets up pretty well. But it's really going to be the guidance going forward, right? Can they get loan growth? You know, we have this flat yield curve, and we always keep on saying about banks, it's difficult to make money in a flat yield curve. So we really have to see what the guidance is, and I think the guidance probably kind of muted at this point. They don't want to get too far ahead. I think a lot of CFOs do that also, kind of lower the bar a little bit, so then they can leap over it when it comes time for earnings.
Yeah, that 2-year and the 10-year inverted, what, Dagan, for like a week?
Yeah. Not even, yeah. And then we had the recession callers, right? Recession. Yeah. You know what, the way I look at it, it's a leading economic indicator. If that turns negative, hey, maybe we have a recession on the horizon. But, you know, inversion for a day or two and everybody ring the bell, it's a recession. You know, all the headlines we've had lately have been negative, right? Yeah. But it's like Teflon. It really doesn't stick to it for too long anyway. It's the price action. Look at the price action here. The market's telling you something.
Well, Rick Ryder told you this, and I want to reiterate it. One of the reasons that he thought that you got that inversion is because all the supply coming out of the Treasury Department has been on the very short end.
Right.
So there was a deluge of supply, which elevated, the demand wasn't there to absorb it, and so you had elevated short-term rates over longer-term rates. Listen, I worry about it. I'm a hand-wringer. I'm a total geek. This is something that I certainly watched because the last 7 recessions have
one
been
of your favorite
preceded.
subjects.
Right.
But when everybody sees
the
same thing, though, it never happens, right? If everybody sees the same thing, it's not that obvious. It's, you know, happened after the fact. When you're in a recession, you don't know until quarters later, oh, that was a recession back here. So everybody's trying to pick this thing out. If everybody sees the same thing, that's not the recession.
Yeah, but recession is 2 quarters of negative growth.
Yes.
Last time I checked, we were at, what, 3%
exactly.
In terms of economic growth.
Yeah, those original projections from Atlanta, you know, that it was going to be 0.2, 0.4 have sort of been going in the dustbin of history. How are the regulators treating the banks these days? Are they starting to say, we want to look over your shoulder again on loans?
Well, on that point, let's show yesterday's drama in Washington, because the bank CEOs took the Hill. The heads of the country's largest financial institutions testified on Capitol Hill before the House Financial Services Committee. Some exchanges got a little heated. Watch this.
I'm concerned that several of these institutions are simply too big to manage their own operations, too big to serve our communities, and too big to care about the harm they have caused.
We never lose sight, well, we'll never lose sight of the lessons learned. Post-crisis reforms have addressed key concerns. During the 2008 financial crisis, the U.S. government took extraordinary and unprecedented actions to stabilize the system, and we all owe a regret of gratitude to the policymakers who stepped in on behalf of Americans. Since the crisis, reforms have made banks much safer and sounder in 3 important areas: capital, liquidity, and resolution and recovery.
Last year, 1 million student loan borrowers defaulted, which is on top of the 1 million borrowers who defaulted the year before. What are you guys doing to help us with the student loan debt? Who would like to answer first? Mr. Monahan, big bank.
We stopped making student loans in 2007 or so.
Oh, so you don't do it anymore. Mr. Corbett?
We exited student lending in 2009.
Mr. Diamond?
When the government took over student lending in 2010 or so, we stopped doing all student lending.
Thank you.
The American government reduced tax rates on businesses to make America competitive. We had been sending trillions of dollars of capital overseas.
How can we make America, reclaiming my time, how can we make America competitive when there is a large number of young people that are graduating,
right, so
and they see no future?
This group pays all their employees quite well, including medical, retirement, minimum wages usually at $18, $37,000 a year, something like that. Competitive business will drive wages and jobs over time.
Steve, your reaction.
This is a reason why you don't want Maxine Waters running a bank. She didn't do a good job with her own bank. We'll leave that aside for a moment.
And, I don't think she knew that the government took over student lending.
No, she didn't. Clearly, in her staff. What does that say about all these taxpayers paid
she's going
staff
down line and
that can't even give a good briefing to their boss? And what this shows is, one, in terms of this whole thing on CEO pay, you want quality, you pay for it, whether it's in business or sports or anything else. And the other thing is, if you keep bashing these banks, what are they going to do? They're going to hunker down, go with what's safe, and that's going to hurt the economy. And in terms of how the banks got bigger, well, it was the government reaction to the 2008 crisis that led to these banks getting bigger, and small banks went by the boards, especially community banks.
But I love how these Democratic Congress people can't help but show us time and again that government's the problem. It's not the solution. These bank CEOs aren't the Frankenstein monsters taking down the economy. It is the government behind some of the biggest problems that we face in the United States.
Let's get to the basics. Why did we have this crisis? The Federal Reserve messed up. The Treasury Department messed up.
It almost messed up again.
The value of the dollar. If that hadn't happened, you wouldn't have had 2008. So governments make mistakes. They blame free markets. Bankers can't hit back too hard. They all could have said, "You idiot! Don't you know you put us out of business?"
And Steve, the solution to too big to fail is get bigger, because as you said, they started gobbling up the FDIC, Sheila Brown at that time. Close on a Friday, open up Monday with a new branch. And
Sheila Bair is going to be on the show today.
Okay. Yeah, but it just kind of shows too big to fail was a problem. And what happened? They getting bigger because they started consolidating some of those regional banks and so forth. Yeah, very interesting.
It is amazing that the head of the banking committee does not know that the government got out of, or the government got out of student loans 8 years ago. That's not a staffing issue. That's something that members of Congress should know on their own. But welcome to the Democrats running the House of Representatives. They're going to continue to do, in addition to investigating Trump, bash big banks. This is part of the narrative. This is setting up their legislative agenda for 2020.
Yeah, this was just a show yesterday. Come on.
Exactly.
Yeah.
She wanted to show that she's in charge.
And it's also the new kind of socialism. You don't take over and nationalize industries anymore. You just crush them with regulation, where they know if they're to survive, they have to do what you want them to do.
Right, and to Steve's point, though,
you pick out industries that you're not supposed to lend to, stuff like that.
Right.
Bad stuff.
Yep, exactly.
Yeah, no, you really want the banks to be healthy. You want them lending, and you keep suppressing them, pushing them down, more and more regulation. They get like this.
Oh, it's Elizabeth Warren were there.
How many new bankers were hired to make loans versus compliance officers?
Good point.
Yes.
That's really good. Meanwhile, let's talk tariffs for a second. Dagan, President Trump is slamming the EU on trade. He tweeted this yesterday. Too bad that the European Union is being so tough on the United Kingdom and Brexit. The EU is likewise a brutal trading partner with the United States, which will change. Sometimes in life, you have to let people breathe before it all comes back to bite you. The president has said many times, by the way, that the EU is worse for the U.S. than China. Ken.
Well, look, I mean, for investors, they like to check the box and say, okay, China trade is done, check that box, and let's jump into the ring with Europe. But it's not going to happen. We're going to have kind of like a couple rounds back and forth.
The president's making no secret that he's
well, again, he's not liking what they did with Airbus. It's coming out. The World Trade Organization said, they're favoring Airbus in Europe, and our retaliation said, look, that's not fair, and we'll do it this way. So, again, I understand what the president's doing, and he has a lot of leverage here, because Europe, every number we keep on seeing, they're in decline, especially Germany, right?
So there are dangers here, Dagan.
So he doesn't need to do anything then. Like, if Europe is struggling and flat on its back because of its socialist policies, he's going to need to worry first and foremost about the health of the United States economy. And you have to avoid between now and the 2020 election, if he wants to get reelected for a second term, to make sure that the U.S. is healthy and stable. And I don't think picking a trade fight with tariffs. We already have 25% tariffs on any light trucks coming into the U.S.
Tariff is a word for sales tax. Sales taxes on the American consumer and the American business community, not a good thing.
Having said that, I think his approval rating is up going into 2020 right now.
It's simply not Trump's style to let someone hang themselves with their own rope. He's going to punch them. That's the way he's always operated. It's the way he's going to continue to operate.
Well, he can airbox with Europe all he wants, but if he starts to try and punch them, it's going to end up swinging back and hitting American consumers in the face and business.
No, look, it's a slippery slope, and so far the president's done a pretty good job. And again, I think investors really like to know that China trade deal is finished before finishing the solo one. But that's not the way it came up. It came up in the middle of all of it. And right now, I think the numbers were 11 billion. I mean, what's 11 billion amongst friends? It's not a big number at this point.
Well, we're talking about, we think there's going to be a meeting between President Xi and President Trump in Mar-a-Lago in early May. So we'll see about that. Very quickly before you go, we're at the start of earnings season. You want to buy stocks here or
Yes. This is the Energizer bunny market. It keeps going. Why? Because the Fed said they're going to not raise rates, and with that, we can actually have multiples expand again.
We will leave it there. Ken, great to have you.
Great.
Thank you so much. Ken Mahoney joining us there.